Certainly that shocked the markets, that number. I wonder, is it time to take profits in this risk rally?
Well, definitely in the China market, we've been taking a lot of profit in those reopening names. But in terms of globally, this debate in terms of the policy cycle, have we missed a recession or avoided a recession, it's likely to go on for the foreseeable future, and as such, volatility in the marketplace.
But it does show that data, which no economists got right. I mean, absolute blowout numbers. Then you look at various other components and you think, this economy is very resilient. If they're hoping to slow it down and have a soft landing, well, they may not get it. This is going to be the real conundrum, and becomes a huge conundrum for people like you.
Yeah, a definite conundrum. And also if we look at Europe as well. So there are still a lot of question marks over the US and Europe. In terms of China, though, just from a pure health of the economy and policy direction, it seems a little bit more straightforward or stable. And that's why, again, whilst the markets reacted very, very favorably and very quickly regarding the reopening, what we're trying to establish now is the second phase of growth, or the second phase of where the market does indeed go for China in particular.
And where do you suspect that second leg might come from? Where do I increase my exposure and what do I fade in China?
Yeah, well, the reopening names of the tourism-related names have obviously had a stellar run, so been taking profit out of them, moving more into more cyclical-related names or macro-sensitive names. But that consumer story is still really, really attractive, and you know, a key point in terms of growth, as Xi Jinping even reiterated last week. So maybe looking at some of the non-China listed luxury brands, because we are going to see people traveling again. It's going to be further afield to, let's say, Bangkok, Singapore, and these Chinese consumers are likely to spend again in Europe, and these luxury brands likely to benefit.
We've kind of hit the head quite a lot just trying to kind of assess where this next rally goes. What do you think are going to be the next catalyst? Do I look at the March meetings as potentially more news?
The two sessions,
yes,
incremental news. But again, what we're doing with the US and Europe or investors is just monitoring the pace and messaging in terms of the cycle itself. And again, that's why the cycle, if we look at China, at least one or two cycles ahead of other major economies. Of course, the risk for China, what could it be? So maybe when we see this normalization play out, could see some news regarding maybe luxury tax reforms or property tax. But again, the outlook for China for us still remains the most positive.